Good day, this is Marylou Edwards of Diversified Mortgage Group. Thank you for joining us today. The topic for today is how to qualify for a VA loan, otherwise known as the Veterans Administration. To be eligible for a VA loan, you must have been in active duty for at least 90 days or at peacetime for at least 181 days. If you are in the reserves, you need to have at least 6 years in selected reserves. Other qualifying factors is if you become disabled before that time frame, it would be determined by the VA. The other thing too is a surviving spouse that has a husband or wife that died during active duty can qualify also for a VA after his death. And also for people who have who are prisoners of war or missing in action for at least 90 days, then there's a limit of one-time use for the surviving spouse. So those are the different factors. If you think you qualify, what you need to do is get a certificate of eligibility from your nearest office, VA office, and present that to the lender or to myself in order to qualify, to start doing the qualifying process. So, going into the VA loan, the best thing about VA is it's the only loan out there that's still no money down. And the other great thing about it is even though it's no money down, meaning you don't have 20% down, there is no PMI. And PMI is private mortgage insurance, and it is a requirement if you don't have 20% down on any other type of loan. But on VA, it is not required. So your monthly payment will be much lower than normal. The only caveat is it has to be owner occupied. Although you can have, there are situations where you can have more than one VA loan at a time because of a relocation or possibly divorce or something like that. So with VA as well, the credit score is slightly lower than an FHA. It's 620 versus 640. And on conventional, the requirements are much higher on the credit scores. There's no reserves required, so even if you put no money down, conventional financing requires you to have at least 2 months of mortgage payments left over in your bank account. VA does not require that. They also allow sellers to pay up to 4% of the purchase price to pay for closing costs. And that's a nice factor because it typically can cover the full closing costs. And that way you don't need to come in with anything at all. Only the vet and the spouse can qualify for this program. You cannot just add like a daughter or a cousin or a friend, relative or anything like that. So because with FHA you can, or Freddie Mac, you can add a non-occupant co-borrower or even a occupying co-borrower. But with VA that's not allowed. The other thing that's different with VA is they require a leftover residual income. So for example, in the West Coast with a household of 4, you'd have to have at least $1,000 a month left over in income to pay for your expenses. So I think these are everything that's covered on a VA. If you have any more questions at all, feel free to give me a call, Marylou Edwards 925-285-5333, or email me at marylou@marylouedwards.com. I look forward to hearing from you. Thanks again for watching. Bye.